In the last two trading sessions, we've seen gold decline by 9%, and today is yet another third day when you have seen profit taking continue in case of gold prices. So from Monday's high of $1,917 an ounce, at this point I think we're just about holding $1,730 in the international markets. The Indian markets also have continued to decline from a high of around 29,000 rupees to around nearly 27,000 or below that in the Indian markets as well. Lots of factors which have led to a decline in case of gold prices. One, the CME hiked margins yet again yesterday by 27%. This is after 22% of a margin hike on 11th of August. So totally the margin hike in this month has been at 49% on the higher side, which of course has led to profit taking. Not just in CME, Shanghai also has been gaining margins for last couple of sessions, and that also has led to decline in the Asian markets as well. Apart from that, you have seen the US data come in on the positive side. The US equities had gained, and also there have been various reports coming in from the international agencies where they have been booking profits in case of gold prices. Also, if you look at the gold ETFs, yesterday was a fourth straight day when you saw some redemption coming in from that one as well. Selling calls continue in case of gold prices. We spoke to Angel, and their downside target for gold today comes at around 26,000 rupees per 10 grams. We also spoke to KDR Commodities, and they also are selling gold. Their target is 25,900 rupees on the lower side. We also spoke to UBS earlier in the time, and they also have spoken about gold and other commodities. Let's listen to that as well.
We've got a 3-month price target of gold at 2,100, but within that context we expect some degree of consolidation over the next 3 months. So I think in the short term some pullback and consolidation is quite possible. I think there is some potential, as you see, a consolidation phase for gold, that people will in fact tend to favour silver. Again, in our forecast this morning, we've raised our price target for the next 3 months to $50 an ounce. So we actually do perceive silver again attacking that number. If there is in fact some form of QE2 and some continuing easing in the dollar, one would anticipate that investors would come back to oil somewhat. I think the other issue, of course, is the outcomes in Libya, and I think there's a realization in the marketplace that, in fact, oil production is, in fact, going to take, in the order of 12 months before it gets back to full production. One still, I suspect, looks somewhat cautiously at the next month, and the formation of the European Stability Fund and the political outcomes. There is still risk that things could go wrong, that we could get a default situation, we could have another leg down. That is clearly a risk in the marketplace in the next month or so.